Okay, good morning to you. Tuesday, October 11, 2016. Look at the commodity markets here. US dollar has been advancing over the last few weeks from its sideways channel. I expect it to continue as interest rates continue to go higher. So higher interest rates, higher US dollar. Typically with the higher dollar, commodity prices come down. But oil has been going against the grain here. So take a look at oil. I mentioned before that 47, anything 47 on oil, the targets would be 49, 51, 53, and 54. At 52, at 52, we have some overhead supply there. Now, I look at it this way for oil, okay. $3 to the upside and $2 to the downside. I move the target, your stops, and that from 47 to the obvious 49 area. Let's drop that down. Okay. All right. So here we are. Here's the obvious 49 on it. This red line is the upper range of the Fibonacci's. Okay. So 52, we have overhead supply. Right now, we're at about 51. 49 would be an area for stops. Now, how I'm looking at this is if this is a pullback, okay, I would say it would probably go back down to 47 on here, okay, but for, as we saw in the big picture, a lot of sideways, okay, so we basically have sideways channel trading here, okay, and a larger sideways pattern, okay, at the upper 60 range. So if oil should break above, we'll say 55, okay, because there's a gappy area up in here. Above 55, then this is going to be around the targets on here. At some point, the US dollar is going to have to start correlating with the price of oil here, okay, because right now they've basically been attached for since last week, okay. And remember that we know that the Canadian dollar, or Canada is 1/3 of oil imports, and Canadian dollar on Monday moves smartly higher. All right, so basically we have a sideways pattern in oil and a larger sideways pattern. I view the overall longer term picture, we're saying years here, is that oil will continue to be sideways. I did see some people talk about 60 yesterday, which is fine, okay, because what we're looking for is an excuse to raise interest rates to help out the macroeconomic cycle here. As I mentioned before, if we have low inflation and full employment, the Fed is actually doing their job, so we should leave them be, laissez-faire. But the market dictates basically where the Fed goes, and we've had a continuation of interest rates to move higher. I believe that Brexit was just shortly after Brexit, that was the low in interest rates. And I continue to see them move higher. But on oil here, basically, it's a sideways pattern and a larger sideways pattern here, okay. And then the channel in here. Okay, so how I would treat it is that there's, like I said, $3 to the upside and $2 to the downside to find the support levels. The first support level would be 49. Now it's going to be obvious there. Okay, this is going to be an obvious spot to stop. Okay, we have had funds and that move into oil, so at some point they're going to want to take profits here, and as markets turn here, the volatility increases. So you'll have what would take 3 days to develop as a pattern. It'll be taken out in 1 day. For instance, we've seen what happened to, I think, a stock yesterday, Monday on the close, lost 1/3 of its value. And I've been sending out charts on sector indexes that have been going down. The Russell peaked out in 2015. Now, mind you, Europe has come back and cleared 16-month highs. So what we have right now is the main I'm looking at right now is the dollar, then interest rates. equities, and then oil and commodities. That's how I'm looking at it for what I'm focused on basically here, because the dollar, I expect it to continue to go higher. Interest rates, and these do trend for a while. And like I said, the dollar is coming out of a larger sideways pattern. So if you're just getting on board now, involved, there's still more to the upside. My targets, I think when we clear 97, 98, I'm still shooting for 103 when the swing comes. And a lot of this has got to be obvious here. If you believe in more QE, if you believe in more, I just don't see it in the marketplace for right now. I think the markets are on pilot. I'm still concerned about the U.S. equity market. It seems like only a handful of equities go up on the NASDAQ. Like I mentioned, the Russell peaked in 2015. And so either the larger equities are going to have to come on board, or they're the little guys, the NASDAQ stocks are going to rotate over and move lower with the larger caps. Now, stronger U.S. dollar, anything you physically have to move, you have your pricing issues. Okay. Start off here with copper. Larger sideways pattern. I expect, a stronger dollar makes copper exports a little more difficult, but we're in an upswing here with home building and that. Obviously, hurricane season, we're going to have a lot of building going on down there, all infrastructure. So we're going to be building some roads and supporting bridges and the such, and building homes. So we should see some of the supply come off for right now from the producers. Okay, so this is basically copper prices sideways. A lot of these markets, even with, we'll see with the equities in the next video, a lot of things are reaching an apex. Okay, so we're running out of indecidedness. So it's basically the markets, and with the volumes dropping, it won't take much and to move these things. But what you'll do is you'll have, typically you get a whipsaw, fakes one way and goes the other way. And you'll know too, there should be a gut reaction. Depending upon which way you go with this. I prefer the short side, so if it should go up, I'd be looking to short copper. Let's break this down a little further here. Okay, so basically this is how it's looking: 228 on the upside and 206 on the downside. All right, so that's copper for the channel, and I just overall feel in general that a stronger dollar is going to be difficult for the markets to produce any long-standing bull market or bull run. The sideways action can be typically viewed as base building, but with the pattern, usually base building, it works its way at the lower ends. It keeps trying to test a new, makes a new low by a penny, that kind of thing. Just a slow grind. This reminds me of people trying to get in on here, but I don't see much on the upside here with copper. I do notice that the dollar should give some back this morning here, with a couple hours to go before the open. Watch out for the head fakes. Okay. All right, palladium. The other white metal, talked about selling this one off hard last week. It did come back down. These are Fibonacci lines, so there's a pause here. So anytime there's a Fibonacci line, if you wanted to do covered writing, that's what I would do, and you could just walk it down depending upon how many contracts you have. Some of you have more than onesie twosies, and just basically walk it down. But platinum and palladium are thinner markets, and thinner markets, and sometimes you don't have access on your platform to the options market. Gold, okay, with the stronger dollar, here's gold coming off of one of the Fibonacci numbers down to the next one. Like I said, do some writing. There might be some filling coming back in here on gold. What is it, about 265, 1265, 1268 area, okay. Reversal back to 80s and 1300. Just backfilling is how I would look at it, because I think gold is a continuation of the larger down pattern that started in 2011. Okay, I posted a chart on kevinvance.com that I thought that this pattern that we recently has been produced is the same that happened, I believe, in 1995. But I believe that gold is going to roll over and continue lower. I'd mentioned 681, and that was just get a target down in here. The first thing is to grasp their attention when I talk about these things. Then I know it's stuck in the sand. It was like the $1,400 call back in here. I don't think anybody else was out there with 1,400, and then all of a sudden 1,400 started popping up. It was obvious to me, it was obvious to other people, and so then I got away from that number and went to the other way, because basically it's the same thing. You know, if in 3 years gold's back down to under $800, that kind of thing, and working with, it's an obvious deal. Equities are higher, the market is healthy with the economy being healthy also. What was that period? Like 1987 type period. That was one. 85, 86, 87 was a period where we had cars and homes. Okay, homes were a little bit different though, because that was the last 3 years of the bull market. We're at 5, 10, 11. 11, we're 11/18. I guess it's 5 nights, 6 nights. Okay, so there's a third left or so, roughly, in the upswing in the housing market. But that data of mine goes back to the 1790s in the United States. Okay, and we're working on something. America is only growing then, so we're working on something here where we have the baby boomers. As they're either going to be a drag or they'll be a benefit, one way or the other. We have medical and things of that nature. They were a driver in the economy on the way up. They'll probably be a driver in the economy on the way down. So gold, good tangent, Kev. Gold, I expect this to continue to roll over, and over the next couple of years head lower here. Let's see, period here between gold going from upper range to the drop 1,200 took roughly a couple of years. Yeah, typically the bear markets are half the time of the bull markets. So this sideways pattern, I believe, is breakout to the downside here, unless something major happens with the US dollar, because that's how I look at it. It's either gold or the dollar. All right, palladium we looked at. Okay, platinum, same thing. It's a continuation of the market, or the movement lower off the highs. Palladium, like platinum, thinner market. I avoid that one. Silver, industrial metal, they expect it to continue lower. Continuation from its high, as you can see, $50 to $17. That's a 2/3 loss. So I'm pointing this out in general for everything of something that you may own. it can fall apart on you in a hurry. But I expect silver to continue on as an industrial metal lower. It's just this is how I look at the secular bear market here in commodities. Everything goes into cycles. Everything cycles. So look at oil again here. Okay. For me, on oil is the move was from 47. Okay, now that it's moved and held 47 and we're up to 51, 53, 54, and 52, there is overhead supply. Like I said, I look at oil as dead money. Sideways for a while, just like we had in the 80s and through the 90s. The same deal, with stronger dollar, that kind of thing. But with oil moving up, I've moved off of oil, okay, and moved into the continuation of interest rates, moving higher, okay, and the majority of the movement will be on the front end on interest rates. So in my eyes, okay, call that a breakout here. All right, so we're up to about 0.78. Okay. Here is the bounce off of the low of the upper 20s. Gave it 3 shots and paused again. You will have, if they're smart, you'll have producer hedging. Okay. You do have the funds that are pretty much piled into this thing here. You have EIA on Wednesday. This really isn't a structured pattern as a 5-wave. This is more of a corrective wave because it's basically symmetrical. Okay, and like I mentioned before, I thought oil was I call it dead money. I don't see, yes, these are sweet moves. You catch 20, 10, 12, 15, plus dollars and all, yes. But for me, and it's the major turns. Okay. It's these kind of swings, especially in the commodities. As soon as I hear something that's at a 17-year low, like with natural gas, I'm all over it. And now we're talking about the British pound, and that there. Remember, you can also go in with options. You don't have to go back into the currency market. What's one thing we definitely know about the British pound is that there are going to be fewer and fewer people who want to be bulls, but somebody has to take the other side of this, right? So you give, where are we at? You give the British pound a few more months here, and people will be finding something else to talk about. And that's usually what happens, is it bores people to death. All right, heating oil, I noticed that, I think in the commitment of traders, that the commercials are getting short pretty hard here. And so I expect this one to roll over. I talked 3-4 weeks back about the heating oil, long heating oil, short gasoline. I don't have that spread out in front of me, but I'm going to pretty much flat on that trade for those of you long heating oil, short gasoline. Same thing, symmetrical pattern type deal. I don't see this as anything positive, except for the fact that it did give it a good go here. I look at heating oil, even though it's said heating oil seasonal. Also, I look at it part of the diesel market too, and how the economy is doing overall. Let's see here. Gasoline, same type deal. It's not at the top of the Fibonacci line. This will also, if this does continue to flag out here, okay. As you can see, once again on the larger sideways channel, basically a larger, I could take that one. I'm going to say that will probably not be seen again for a long time. That area down here, this will be a toughie here. That's because that's your momentum low. Okay, that you have the wrong people pricing what this costs. I mean, if that's how that works. Okay, so basically stuck also in a sideways channel. As I come out of it, it looks like it's trying to make some sort of a flag here. Remember, the shorter or the shallower the pullback, the more bullish it is. It's basically stuck in between here, because of where it's at and everything, and the type of trader that I am. I wait for the major turns, okay, and that's how I look at it. I wouldn't. You're basically halfway through it now, of a swing on here. Okay, but right now we're running into some overhead supply in crude oil, and there's a pause here, and this also just doesn't. The structure is more corrective in nature. That's how I look at that. There may be a little bit more to go there as that's beginning to flag out. All right, how do you look here? Okay, 142. I guess that's a nickel. That's a decent day trader. There's basically your numbers: 152 on the upside and like 147 on the downside here for gasoline. I personally would just avoid it for right now. That's how I'd look at it here. We've had a pretty good move in energy here. Heating, I guess heating oil. I guess in this case you could short heating oil and buy gasoline, because you could see gasoline is the weaker of the bunch, though. It's only halfway into that channel where the heating oil is already up there. So I guess I'd probably go after shorting heating oil here versus long the gasoline. Okay, natural gas. All right, so we have move off of the 161 low. This is our first reaction off of it. Okay, it's basically bought. It didn't come back 50%. Typically, you have the initial move where it comes back about half. Okay, and we're moving up. October typically is the peak in natural gas. I like the long side of this because I heard 17-year low. I'm going to get an opportunity of buying something at a 17-year low. The main draw is that I know what my risk is. These are commodities. They can only go to zero. So something's at a 17-year low, i.e. my risk is less. So it's like being long the British pound, okay? Or looking at it. They start talking about 3 decades and stuff. It's like, okay, that catches my attention. And I was around back then too. To go back, we ended up focusing on the stock market from 85 to 87. And the pound went up behind the scenes there. And remember, they're also financial and stuff too. Even though I'm looking for some sort of shock to the equity market, my overall look is bullish on this because I look at the grand macro cycle of this is that the United States should have a home building and car replacement economy. The slow growth in that is we have is aspirated by the baby boomers who should be retired but are still in the workforce. I'm running parallels with the Great Depression economy. We have that. We also have the millennials aren't spending as much, and they're not playing ball. we broke up Ma Bell just for the millennials, and they won't buy a landline. Shame on them. They need to be tortured. Get the old green trim line. All right. Mickey Mouse phone. All right. So natural gas. Okay, natural gas, I continue to look at it as I don't expect this year to have a hard freeze. Okay. And natural gas has been moving at a pretty good clip since EIA was the last retest. I was hoping that natural gas would come to further and scratch my greed. I was hoping to get, where is my little pointer guy? I was hoping to get a little further underneath here, and it just didn't do it. Poked its head through, came back, which is basically back inside the channel. Now it broke out of the channel. channels you can use as measuring. So from 80 to 10 would be 25, 30 cents higher is how I'd look at it. 30 cents in here would be 40, which would be your back up to your gappy areas on here, right? So I'd go back 5 years. Okay, ooh, nice. All right, so, okay, so here's 3340. I talked about that last year. Okay, there's gappy areas in here. I'm looking for, what was it, 4? 4, the 4 will be tough, but I'm looking at, for the next logical areas, just to mentally, is 4, 6, and 8. Okay. Where's 6? Here's 6, and then 8 is roughly before the acceleration phase here. Okay, so it basically took 8 here, 6 here, and 4 kind of through the meat on here. You can see it's 440 or so. Okay, so what am I talking about here? So I basically 440 or so. We have a buck 20 higher. Basically, I will say that natural gas will not break out of this channel until we get the hard freeze type of deal, but we will see it lead into it. I wouldn't be surprised if we had something to this degree of a pattern where we come up higher, trade sideways, we duck into it, say over the next summer. It's a great year. Everything's mild. Everything works, It's not extremely hot during the day, and it's roughly cool nights for the majority of the United States, that kind of thing. And then we get to take off with the cold winter, okay. But for right now, basically, I will say that natural gas is going to be stuck in this longer trading range that's been going on since, we'll say since the 12th bottom. Here's the 12th bottom, and that's as far as it gets, okay. So then here's the bottom here, okay. Maybe it'll only come up to 4, okay. So there's some gaps in the 440 area. There's a whole bunch of gaps above this area here, but the thing is it's now moving. Okay. I'm not going to sit here and try and cherry pick D-gas. Okay, I'm looking to buy this one for the big move down the road. I think this year will be just normal winter, and next year should be a mild year. 2017 should be a mild year, and that would probably be it, because 18-19, then I expect a drought and a hard freeze to come through. So on any weakness, I want to buy deferred contracts, okay? Because if they're going to get natural gas, they're going to start getting a little bit frothy in here, and they're going to need to be spanked. It was a pretty good move here, 15 on a 85 or so, so 20, depending upon my contract, 20, 25 cents, I think. And you had to move up, but I would rather write to covered calls versus trying to go after this on the opposite side. Not much came out. Some people were looking at this as energy related to with the Hurricane Matthew. And we didn't see that pan out either, right? Mild, did they say it was a milder hurricane? And I try not to listen. I don't need a reason. I just look at the chart. This chart, natural gas is headed higher. I'm trying to find places to buy in weakness. That's if I can get into this area. See, now I'm buying above 3s. Before I was buying below 2s. Now I have to buy above 3s. My risk is greater. All right. So just like with the British pound, you can buy them. You can go 9 months out, that kind of thing, and buy options. Put on spreads, what have you. The whole thing is you have this kind of deal also with the British pound. But like I said, you start hearing 17-year low, whatever, boom, there you are. And we're talking months here, folks, okay? And 320 doubled, okay? And for commodity, throwing the leverage, it's good. All right, so like I said, I'm not going to try and pick the D-gas, okay? But I am looking for pullbacks to add deferred contracts, and you can go out. There. Like I said, I'm looking for the freeze 2018, 2019, that kind of thing on natural gas. Okay, cocoa, pretty hard slide yesterday. I'm looking for it to continue lower. Basically, nice wicks here on this pattern here. That was a good sign that things were coming to an end, but I expect cocoa to continue lower. It can drop. This can go under 1,000. So it has done that, I believe, back in the 90s. I remember playing cocoa back then. I remember hearing it going to a 9-year high when it broke out of, resistance. And then I think the following day it was limit down. Ouch. Yep. Yepper. Buying the retest. Owie. Okay. Cocoa. Coffee. Okay. Basically here on this longer term chart, we're going back a decade. I guess not to 2011. All right. Basically, we're working on the saucer bottom here. Okay. This is a larger channel here. Okay. For coffee. Coffee's 375 per penny on here. 100, yeah. So you're looking at $10,000 here plus, or about going up into this area here. So be very careful with coffee because start moving 3 cents in that at a pop a day. I believe it's a pretty good move yesterday too. Okay. Corn. I'm looking at corn as this is just a seasonal where they're lifting their hedges, and I would be, if I'm a producer, I'd be looking to hedge. I see corn in the 2s by harvest of 2017. It's all of a sudden you're going through winter at you're going to start playing that pattern of 280 to 320. But as a producer, I'd be hedging here. Cotton, this can go into the 40s, and let's take a look here. Oops. All right. This is a really good pattern. I have to exclude all of this over here because this is Glencoe not putting in their stops and getting chewed up pretty hard. Okay, I like this longer term. This is more of I like this as an accumulation pattern here. But you're going to need deep pockets going into this because you can have cotton drop 20 cents, which is 10 grand a contract. Okay. So this isn't like, putting up 20 grand to buy natural gas. I mean, you're gonna have to pop up some good coin here to for cotton. Okay, if for the accumulation here. That definitely gonna, I guess you could play it by the 2s on the options on the way down too, but I'm not seeing any bottom basically here in cotton. I guess I could break it down a little bit further. This is a pretty good move out of it. 76 is up there too. These are all, they can still drop and drop hard. Okay, so even though on the longer on cotton, it can come down further. Okay, and you're going to need some deep pockets here. But I'll keep an eye on it, just like I did with sugar, natural gas, and things of that nature. Lean hogs, I posted about eating your meat. Hogs, yes, they can drop back down to 1998 levels, which was also during the Great Depression, which was kind of a spooky thing for me that hogs are at Great Depression prices. I wonder if anything else can, what did that take? 98, it took 7 years for the stock market peak. No, for the real estate peak, and 9 years for the stock market peak. And here we are, 18 years later. Okay. All right. Just trying to see if there's a little bit of a cycle here. But hogs, in my eyes, there's not much more on the downside here on hogs. But for now, I'm busy. I'll pass on watching this thing down to the bottom. Live cattle, same thing. It's at a pretty good drop, but it can fall further. As you can see, it can actually go below that into the 70s. It's the typical prices of the past, 40 area for the hogs and probably 70s area for cattle, just because of the strong dollar. And meat eating in that. I'm beginning to see a little more marketing here in America on cow prices and that. All right, what do we have for alert? Okay, so British pound moved up here. British pound is coming off the bottom. We're at 122.74. And when I started this, it was around 122.50. All right, so live cattle. Okay, lumber prices. I like lumber because of the swing in the housing sector. We should have, like I said, another third to go in the home building into the 2020s, early 2020s, but we're going to have one recession. Soybeans, same thing. If you're a producer, I'd be hedging on it. You're going to have some seasonal here also. You can also end up with wet fields and things of that nature too. I'm down in the desert, so I can't really watch how things are progressing overall in general, but I assume everything is in the price. Just everything that's under the sun is in the price. But in my eyes, I just like with corn, I see a good bumper crop next year in 2017. Sugar moved up smartly, but has found one of the areas here of Fibonacci number. I'm not looking to short this. I'm looking to find an area to buy. Okay, because of this could be a pause before continuing higher. Remember, I mentioned that the sugar trading desks of Cargill and Brazil's #1 producer got together. Amazing how that happens. Did they even give it a year before it took off running? I'd prefer if we'd stop giving sugar subsidies. No. Just let it run on its own. It's in a bull market. Let's just see what happens. Okay, here's wheat. Wheat's coming down. I mentioned $3.99, looking to start it as an accumulation. I'm going to assume, though, that this pattern is a little longer than I'd like, and I expect it to come down further, and it probably in sympathy with the other grains. Remember that it does have a couple of different periods of, what do we have here? A couple of periods of harvest. All right. Oh, yes. See, isn't this interesting? Okay. 408 and 410. Okay, I don't like that chart as much. Okay. I'd set an alarm. This is only a 12-cent range here. But this looks to be whippy. It's more landmines than anything. I look at the wheat here. So I think that's it for the wheat. Sugar, soybeans. Let's do this real quick here. Go back to oil. Okay. Oh, whoops, need my pointer. All right, so we should be looking at the futures here. Okay, so this is oil. Okay, so we have it, the EIA back in here, strong volumes. Okay, so this is the move into 47. Okay, so it held 47. Okay, so if it holds 47, that's 49, 51, 53. Okay, so we get that. We get the first pause at around 50-ish area. They found buying at 49. I thought maybe we'd see it come down a little further, but that basically told the shallower the pullback, how bullish it is. Here, basically, we have basically a retest on the breakout area again. Now, the thing is if I had a lot of people come to me about oil. So when I talked about 47, that it would run to 49, 51, and 53. Here we are up at 51, and now you can be concerned that it's losing its momentum for now. Like I said, I do find there is some overhead supply. You can see a bunch of lines up in this area here at 52. So in a sense, what I would do here is, if we have a weaker dollar here, but remember the dollar's been stronger and so is oil. So something's going to have to give here. I guess I can do the 51.20 as a little alert. Okay. All right. What I'm looking for here is I'm looking for at least some sort of test of 52. Okay. And see how it behaves at 52. If I was going to be an intraday or a couple of days worth of pullback in oil. But as of right now, because of the way that it's been handling itself, I have to still give it to the bulls. I mentioned that we'd move from 47 to 49, where's an obvious area for having stops. Okay, so that's the thing I was talking about is you have, okay, we're at 51, here's 49, it's $2 there, and up to 54, but 52, the first stopping point here. 52 might be a problem here, so at least you'd get a pause. But as long as it can hold this breakout, what it's at, we'll say 50-50 just for round numbers here. Then the trend is still up, and with the 49, the angle of ascent is increasing. They're rolling out the people at 60. So what I'm getting at is that you may have newbies who are just getting on board here. They didn't listen to me at 47, and now they're interested in buying at 52. Okay, so like I said, my thing is I basically stand aside here to look for an opportunity for it to get back online with dollars. The dollar goes higher, oil should come down. Now that this morning we're getting the dollar to come back some, come off. Oil, in theory, should go higher, but it's been going the opposite, so maybe it'll go lower. Okay. When things like that happen, the price of oil and dollar their correlation is diverging. That shows you the power of the market. So right now, I have to leave in the hands of bulls in oil for right now, which helps. Let's flip the page over. What is oil typically? Oh, it's inflation. Okay, and what's the Fed supposed to do? Squash it. Okay, so raise rates. So I get off the oil gig and we go back over to the commodities, our interest rates. Okay, so zip on through to the other side. Zip on to the others. Okay. Okay, where am I? All right, so here are bonds. Okay, so this was a bounce a couple weeks ago. Okay, in debt. This is when, what did we have? This was going into the jobs. Okay, this is the week prior. Okay, this was to catch people. Okay, the week before the numbers and leading up to it, you can get trying to find the weak-handed shorts here. Okay, so now what do we have going on here? We have debt. This is the bond market, the long end, at a new low area here. Okay, it is pausing. There's going to be an acceleration phase here, but in the short term, 165, I'll say, is overhead supply. But what I'm looking at here is that both equities, they're pausing, and so are bonds. But some of this is going to begin to become obvious to people. Okay, and that's where we're looking. It's like, okay, we're all looking at the same pattern in the S&Ps and the Nasdaq, or no, not the Nasdaq. We'll just use S&Ps. Okay, we see it's reaching an apex. Usually it swings both ways, whipsaw. We actually had that last week with Thursday, Friday. Okay, so here we have, so it's either the bulls are going to take the S&Ps higher, okay, and that would cause a continuation of interest rates to go higher here, right? Money comes out of debt and goes into equities. Okay. Or the flip side is we do get a bounce again here in equities on some weakness, a bounce in debt here. As equities come off. Okay. So how I'm looking at this is both of them are at an area where there may be a pause in the continuation of the pattern here. We may see equities come off this morning with the dollar, because that's been going the other direction too. Typically, if the dollar goes down, equities go up. Okay, typically. All right, but then things begin to change. You get foreign investors because their currency. It's like, even though the FTSE has gone up X amount of percent, the currency loss. Okay, if you sold today, and had to repatriate back into U.S. dollars, you'd still be down, even though it's the FTSE has gone up. It's a repatriation of the currencies. So here, I'm looking for at least a pause here while we're waiting for the S&Ps. The quieter it is, okay, for the bulls, they get the upper hand on this because they're because of the lack of volume that's into this here. But for the bears, it's where the pattern's at. Okay, it's outside of the trading range lower. Okay, so like I mentioned before, it's not that I thought that equities were going to enter in a bear market. It's that they're susceptible to some sort of shock. Okay, so if there's anything for shock, I've really not seen any support underneath it. Okay, basically you'd have to be the little guys that would be buying the dips on this, because the pros would just sit on their hands, because that's what I'm looking for. I'm looking for a good sell-off to load up again for the leg into the recession and the leg into the top of the real estate cycle. So I'm looking for a buying opportunity to buy equities to hold on for 7, 8 years, 9 years, and longer before, say, a bear market develops. All right, so for bonds, I'm looking for somewhat of a bounce here and maybe an equity pullback here to go along. With the dollar coming off here, you're gonna see some things pick up here. I mentioned on Friday's posting that it was going to be the euro that's going to be the next currency on the chopping block, and I expect that to continue here. And I believe I also did a channel count with that. Let's go through here. Corn, like I said, corn. If you're a hedger, or if you're a producer, hedge. Here's the 5-year, same thing. 5-year bonds sold off hard. Okay, you are getting some money flow, so you're getting people to kind of buy into this thing here. So we're getting some early people to buy into the debt. So we may have something coming up here with equities. All right, bean oil, 4-year charts. Bean oil is basically holding its own, but the money flow is a little bit up there for where prices are at. Soybean meal, same thing with corn, trading at the lower range, continuation pattern to the downside. Swiss franc is kind of setting up this way too. We're going to see a lot of apex breakouts here, but like, if you're wrong on these apex, if you're wrong at the end of the day, just hit reverse or flip your position. Okay, because there's nothing like, all of a sudden you enter 4 different markets and they all go whipsaw on you. It'll be now is not the time to be flustered, looking for opportunities. Money didn't move much into the 2s, but they did move into the 5s. Here's wheat. Right now, I'll give it to the bulls if they can swing this the other way. It's, what is that, 2 cents? Okay. Here's Australian dollar. Okay. Since I expect commodities to come down, I don't expect much on the upside here in the Australian dollar. These are 4-year charts. British pound moved 4 years. Okay. All right, so here's where we're in the British pound. Okay. so that's our low. So we need to basically move above here to see if we can get things rolling here. Like I said, the move up in the British pound, it's going to, everyone will be watching something else, and this is just quietly, all of a sudden you move back up and you're right back up into the 30s again. Okay. That came back a little bit harder than I'd like to see for continuation higher to 76 from 75. So this is another 140 ticks higher. I will lean that way for now, just due to the fact that a stronger Canadian dollar would go along with oil. So this is part of a pause too. Here's the lower end here. See, this is, it's a hard swing, but the 50% back was a lot greater. Okay. Sorry that these are kind of rough. Okay. You can see the 50% pullback here. What am I looking for here? We'll just say that. So the breakout. Okay. Okay, here's the euro. Friday gave us an update to sell into it. Okay, we're down to here. And people are moving out of it. Okay. Possibly some back and filling this morning. It's 11:30. I don't think anything more than 11:50 area for the euro. Japanese yen was banged off. Okay, we may get a run up to his 96, 97 area, 97, excuse me, 96, 97. Okay, so that's, we'll just say 97 for the Japanese yen here. Like I said, I'd like, if this goes up, the pair goes down, and I posted a sideways pattern on the yen. The channel is about 400 points, so it'd be 104 to 108 if it breaks out to the upside, or from 104 to 108 if it broke out to the upside, and then 100 to 96 on the downside. So it has a 400 point range there. Okay, same thing, Mexican peso here. As this goes up, the US dollar Mexican peso pair goes down. You can see that money flow came out of it on the breakout, so there should be people to chase this, so it'll continue to, the pair should continue, US dollar Mexican peso should continue to go lower as people come into the Mexican peso futures here and buy. Cocoa, we talked about that before. It looks like there might be a pause here and a bounce up to 27.20. You're looking for places to short crude oil. Basically, you retested the breakout, needs to hold it. 52 will be overhead supply for today, we'll say. Okay. 50-50 on the downside should be your alarm. Cotton. Looks like it wants to go lower. Okay, so here is basically sideways in. This is the mid-cap 400. As you can see, the channel is narrowing and narrowing. We're coming to an apex here. And it's going to break out one way or another, and you're going to end up getting a trend to come out of this thing here. But as you can see, this was for the bulls. It cracked it, and now we're basically, what I'm getting at is that it held this line and lost it. Now it's trying to hold this line. If it loses it, here's this line, and we begin to go back to July lows. Okay, so on your little charts, when you're looking at them, if these crack lower, you're going to go back to your July lows here. What's this one? June. Going to go back to breaks and lows, I guess you could say. If you're watching, if just for reference point, same thing here. Held the line, broke it. Just trying to support the other line. If it loses it, same thing again. Take a look here. Here was the median line, held it, held it, held it. Once it broke it, it fell hard. Found support, up, 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 up. Two different looks at things, huh? Here's the sideways. Here's the support line. It loses it. What do we have? 2140. We're back to the 2140 number here. Should correct it. Then we're down to 2070. So that's a quick 70-point drop back to your breaks at levels. And then that's going to really start things flying here. Hopefully down, continuation to the downside. That's S&P, and then let's go back. Let's do it. Let's just walk this thing down here. Okay. And here we are. All right. So, yeah, here's the lower end. See, the channel, it broke through this, it jabbed this channel, and then it jabbed up above up in here. So we're definitely reaching an apex here. 12 points to the downside. What I'll do is I'll give the bulls another day here, because what they can do is they can pull it out, get everybody to buy in, say on the open on Wednesday, and then drop it. But we're definitely coming to whatever's for both bulls and bears. I mean, take a look at this here. Okay, basically, if you just take a look at, we've basically gone since 7-11, nowhere. It's basically sideways. It's driving the bulls crazy. It's driving the bears crazy. And my thing is I'm standing my ground on this here. Even if this is a large, you could say it's a head and shoulders pattern too, right? But I'm looking, once it cracks at 2140 level, that should do the trick here in my eyes. Let's see here, a little bit better, yeah. See, the money flow has come out, so there is money to push it higher. We'll say, what's that? Still, we didn't get up to the 60s. We're at 70. 70 is the upper end. Since the NASDAQ is, let's just get up to the NASDAQ. Okay, there's gold. Yeah, with the dollar coming down. Should get a bump in gold. But like I said, I'm looking for places. It's at 70, 80, 90. Yeah. You're looking for places to short. Go with the main, and here's copper. Yeah, copper looks like it's going to get a pullback here. People are a little too frothy on the copper. Heating oil, same thing. Like to see money flow come out of this. And 149, 72, 75 areas, the point of control there. There's natural gas. Here's natural gas. Here's natural gas. Let's go back. Natural gas. Okay, whoopsie. There we go. Ding. Okay, they got the 330 on here. This is the November contract. I reversed it down to 24. Okay, so we're down 3 cents this morning. Okay, the angle of ascent, you can't continue that. Usually that's at the end of moves, like bull market moves. You have a lot of people who short options, what have you. I mean, how long have we been talking about the gaps in the 340 area, that kind of thing? All right, so like I said, I'm looking on any weakness. Honestly, to go back into the threes, I guess it's just a number. But I had mentioned I didn't think we'd get back into the threes. The last pullback was about 20 cents. So natural gas is going to have to hold, say, 294 area to hold this thing together here. What's this line here? 305. So that you may have that here where everyone wants to buy under 3 and they'll never get below 3, that kind of thing. So they have to chase after it once again. All right. Because some of these people who are bullish and not buying, kind of like the oil at 47, it held 47, continue. Same thing with the natural gas. Okay, here's the NASDAQ. NASDAQ yesterday, Monday, did break out to a new high. Couldn't hold it. This is a nice pattern right here. You could stop short, and that would be your Okay, if you short, all right, this would be your stop. Well, how many points is it away? 85, so it's 8 points, so that's not too bad. 8 points isn't too bad at all, actually, for a stop. Okay, if you short here, okay, and like, of course, this is 2-hour charts. Where are we at a 15? Okay, yeah. This would be your stop on here on short. Okay, if you short, what's that, 4 points? You're gonna have to splash one on the screen, but that would be a good step. If this, see what you do is, okay, watch this here. Because of the type of pattern that it's at, it couldn't hold and break through, right? So it stuck its head through. Okay, it stuck its head through, couldn't hold it. We're now back into this top of the channel. Let's see how it came back in. What I'm looking at is that if this doesn't hold this line, it'll break to the next line. And then all of a sudden you have a job that didn't hold any continuation. So you short one. If you get a bounce at all, we're talking 4 points here. Bounce at all, you're short, like, you know. But this is one of those where this is your stop. You may have one that's a runner. You know, if you guys get one here, let it run. You know, try it. You're willing to hold the loser for 3 or 4 days, hold the winner for 3 or 4 days. The key to all of this is to hold these winners here. Most of you come back. How I lay everything out is that it's price targets. Okay, just like with the oil, 41, 40. I could have said, you know, here's a 4-day moving average. When it goes below it, that's your stop, or what have you. Okay, but it's basically targets, because you're putting in, this is my buy, this is my sell, and this is my my stop. Okay, so here's your stop up in here. We'll say 94. Okay, we're at 85 now. Okay, so you short one, and this would be your stop. Okay, because if this doesn't hold, you're going to get a winner here. You're going to get a runner. Okay, because it's going to then, if it cracks through here, 80, 48, 80, and we're looking, I guess we go back, playing in 20-point ranges again. Back to 60 on this line. See what I'm saying? As time marches on, this line comes up, it can't hold it, it breaks through, it goes to the next line. Okay. See how it found support down in here? Same thing. It tried for the line, didn't do it. We both had both a vertical and a horizontal breakout. We won't even talk about how far, you know, the Russell is, or the Dow, you know, and it's only just a handful of stocks in the NASDAQ. Okay. So come back through here. Looks like 70 is a point of control. Just marching down by tens. Then the low, 48.60 and 49, yesterday's high. But they're going to need to, the NASDAQ is going to need to pull some other stocks with it here, or we're basically doing the dot-bomb stuff again, which is fine, you know. Yeah, gets us out of a range, right? Gasoline. It's a pretty good bar there. These are pivots, so if it closes below it, then you stay on the short side. Sugar looks to be coming off some here. Money flow is out of it, so there may not be too much more left on the downside. Silver, same thing, just a bounce off the bottom. Here's your Russell, trying to find some support here on pivot. Okay, so probably 1250 should be overhead supply. Take a look at the bigger picture. All right, Russell might be the key to today here. See how Russell holds up today. I got a sneaky feeling that we move Russell to the high of up here, poke its head through on the open, which isn't an hour away. And we're back around again to the VIX. Okay, so Russell, I think, might be the key to today here. Try and run it higher. But you have a lot of stocks, though, in the background that are weaker. Just like I also said before on this Russell, You know, it peaked. There's the daily. You know, yeah. Okay. Yeah, it's going to need for a reversal here. Going to have to chalk it up to the bulls here. It's going to need to have some sort. They're going to have to come into the Russell and push it. It's the bears to lose today is basically how I'm saying it. And VIX, that's come off of one of those things. You buy it, you know, under 15, under 14, under 13. You sell it at 16, 17, 18, that kind of thing with the VIX futures. Here's the Dow. Okay, you can see here, Dow goes up, goes through the upper end. This reminds me of trying to clear 3 in natural gas. Comes on through, pokes on through, doesn't make it, comes back in. Now here you have, here's a wiki here. You have people selling into this here. Okay. This one I'll chalk up to the bears as of right now, because it needs to see the follow through. You had the selling. Okay, and we're back to bonds. If equities go higher, bonds will continue, and debt will exacerbate its losses here, because a lot of the stuff is going to begin to show us. They'll start saying bonds have been down 7 days in a row. You'll get that talk. Let's go back. Here's the euro. Okay, money coming into the euro here. Okay, so the dollar's coming back off. The yen should be coming down. I'll send charts out on that. People chasing off the Mexican peso. Here's our crude oil again. Okay, so here's pivot. Okay, so they bought pivot, which was the breakout here. So now we're trying on the upper end here. I have to say that's, let's see here. Oh, go this way. Okay, what's this one up here? 53. Okay, so here's 52 and 53. So you're seeing how it's going to start running into some overhead supply here. And of course, then that you can okay, if you're still long, all right, and your stop's at 49, if it breaks out, right? Okay, on the way to 52, you'd move your stop up to pivot. Right now, it's holding pivot. These are pivots for tomorrow. These are resistance levels for tomorrow. Resistance levels for today. Pivot both weekly and daily, and the support levels. Okay, it's not that I'm looking for a place to short oil. I'm going along with the fact that if oil held 47, it would go 49, 51, 53. So we're at 51. Okay, so what do? Move up the stop from 47 to 49. Okay, so you're locking a couple of bucks here. If oil should break out with the with the weaker dollar, this minor breakout here, then you'd move your stop back up because the angle of ascent is increasing. Targets to sell, well, I talked about 51, 50, you know, here you have 52, 53, 54, that kind of thing. Do I think it's going to 60? I don't think so. I think that I think it was at 55. There was a lot of supply at 55. Okay. And when you begin to talk like that, you're talking, you know, we'll just use round numbers. You're talking 60 from 50, 20. Oh, I think it's going to go 20%. You know, could you imagine me saying, you know, I think, oh, there goes my British pound. Keep going there, buddy. British pound. Okay, and I'm looking for areas to reshort the euro. 1085, so 50 more points. Okay, and the crude oil, same thing. If it breaks out, I'd be moving this trail up here. Okay, so we break out to the upside and aim towards 52. You want to get it back underneath here. Okay, to trail this thing up, because the angle of ascent's going to, could you imagine all of a sudden we start talking about $60 oil, you know, from where we were at before. There is beginning to get a little bit of frothiness in here, though. Remember, the funds were pushing this thing, so And take a look at mid caps, futures. Okay, where are we at? 52. Okay. All right, so looking like a little bit of weakness here on the open. Like I said, 40 at the low end. It's a range bound here on S&Ps. So I'm going to leave you with that, and then everyone have a wonderful day. Tuesday, October 11, 2016.